Good afternoon and happy Thursday, everyone. And it's Scott Wohlers with River Place Capital. It is Thursday, April the 27th, and want to take just a brief minute to discuss what markets did last week as we entered into earnings season. Essentially really last week with a lot of the big banks reporting. The S&P 500 was down 0.10% or down 10 basis points on the week. The S&P 400, which is a measure of the mid-cap index, was actually positive 38 basis points or 0.38%. And the S&P 600, which is the measure of the small caps, was down 30 basis points or 0.3% on the week. So a relatively flat week as investors had all eyes pointed this week to understand this is the week that all the mega cap tech earnings are reporting. And we started to get those earnings Tuesday with Microsoft and Google. And so as we were heading into this week, we saw pretty decent earnings from the banks amid the crisis that we saw, or the mini crisis that we saw with SVB and Signature Bank, where with those failures, we saw that the big banks were continuing to do very well. Some of the regionals we got last week were case by case on how well they're doing. And if you have questions about why banks guided down for the subsequent quarters and their guidance, or why their margins are compressing, feel free to give us a call. We'd be happy to explain what's happening there with the banks and why they're lowering their guidance. But this week we got big cap tech results. But heading into this week, I wanted to point something out, that investor sentiment is at historic lows. CNBC ran a survey where they surveyed 1,000 investors, and 69% were pessimistic about the future. 53% of the respondents believed that we were in for an economic slowdown, and only 24% believed that it was the time or the right time to invest right now. And so with all that being said, we had that sentiment coming into this week, where you have very depressed equities in the growth sector of these mega cap tech names that have been so depressed over the last 12 months. They have been the epicenter of the selling pressure. Now you fast forward to this year, they've really been what's propped the market up. If you look at the S&P 500 and you add Tesla and 6 big cap tech names, they comprise 86% of the overall return so far this year in the S&P 500. So a very narrow market. Investors don't have a lot of confidence. They're not putting a lot of money to work. They're being told to sit on the sidelines. What's wrong with waiting for the recession that's coming? In T-bills getting 5% for this next 6 months, and that's what they're being told, and they're doing that, and that's fine. But what I would say, and what we would say at River Place, when sentiment on Wall Street is so one-sided or one way, and when everything is rip-roaring and good, and everyone's positive and everyone's getting in, normally that's a great indication that it might be a good time for you to take some profits there and reevaluate if that's the kind of trading you do. It's the same adage on Wall Street, where if pessimism begets pessimism and everyone's pessimistic, but what happens is at some point that news is going to change, and it's going to be very dramatic when it does to the positive, and the markets are going to take off. And if you're not there, then you're going to miss out on some very great rallies in these equity markets. If you look at the nice little mini statue I have over my right shoulder, it is a bull taking down a bear. And if you look at historical averages, we're more likely to be in bull markets than we are bear markets. So what we would say at this point is, after these great earnings that we've received from these mega cap tech companies, then maybe it's time to, if you're sitting on the sidelines, it might be time to dip your foot back in and be positioning yourself for the eventual recovery in the equity markets. Because remember, the equity market's going to price in the eventual economic recovery well in advance, before there is any economic recovery that needs to happen. So when people say, well, the market hasn't priced in a recession yet, well, what do you think 2022 was, when you saw a big bull market, or a bear market, big bear market in 2022? That was pricing in all of that. And so what you have to be ready for is the eventual recovery. So when pessimism and sentiment is so one way, what we would tell you is take the other side of that. It is proven time and time again to be a successful strategy. So if you have questions about how to navigate these really volatile markets, feel free to give us a call. We'd love to talk to you. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for listening.